Good morning and welcome to the Killik & Co market update. We've seen a small improvement in global markets this week, and it feels as though we're starting to get some buyers coming back in following a weak start of the year. We've also had lots of corporate results coming out this week, so we thought we'd have a look at some of the most notable ones. So let's start with the Walt Disney Company. Here's the 5-year chart for the Walt Disney Company. As you can see, the shares did really poorly at the start of lockdown because people were concerned about how profits would be hit following the closure of theme parks and cinemas. However, during lockdown, Disney's new streaming platform, Disney Plus, did incredibly well, and you can see the share price did really well after those subscriber numbers came out. However, over the last few months, the share price has dwindled a bit. People were clearly quite concerned about how the subscriber numbers would fare as the economy started to reopen again. However, in the update this week, the subscriber numbers were actually very good, and you can see the share price has reacted well to these results. Let's take a look at this chart here, which compares Disney's revenues for different departments between the fourth quarter of 2020 and the fourth quarter of 2021. So for the media and entertainment division, you can see that revenues are up, and that's largely thanks to Disney Plus and some success from some films that have been released. But mainly the parks division has almost doubled its revenues. And that's because people are obviously going back to these parks in droves now that they're open once again. But more importantly, people are spending a lot more in these parks. Apparently, the average visitor is spending 40% more on a park visit compared to people in 2019. So it really feels like this is a year when people are going to be spending a lot of money on experiences. Next up, we have CME Group, which is the world's largest derivatives exchange, and it focuses on lots of different types of derivatives, including those on interest rates, currencies, and commodities. This chart here compares the traded volume for different types of derivatives between the fourth quarter of 2020 and the fourth quarter of 2021. You can see for most types of derivatives there wasn't really a big change in the traded volume, but for interest rate derivatives there was a massive increase. The traded volume went from just over 6 million contracts to almost 10 million contracts, and that's likely because as interest rates have gone up, individuals and businesses have either been buying interest rate derivatives and options to speculate and make money from those higher interest rates, or to protect themselves from those higher interest rates. And it's logical to assume that the traded volume in interest rate derivatives will continue to rise as interest rates themselves continue to rise. And looking at the 5-year share price chart for CME Group, you can see the share price has gone up as interest rate expectations have gone up. And finally this week, Morningstar published quite an interesting report. Morningstar is a massive company focusing on research and investor insights, and it particularly focuses on funds. And this week it has published a report into the European sustainable funds market. Europe is very much at the forefront of the sustainable funds universe, and at the end of 2021 there were over 6,000 funds in Europe promoting themselves as being sustainable. However, in this report, Morningstar has analysed all of these funds, and it's concluded that at least 1,200 of them are promoting themselves as sustainable when they're not really sustainable. So Morningstar has removed these 1,200 funds from its own sustainable funds list. So this is just a really important reminder that when you're buying sustainable funds, you should really look at the contents of those funds and make sure that the definition of sustainability that the fund manager is using tallies with your own definition of sustainability. Looking ahead to next week, we've got results out from Airbus, Nestle and Airbnb. So that's it from us. Have a good weekend, have a good Valentine's Day, and we'll see you next Friday.